be a press conference to follow at 2:30 p.m. Eastern time today. Coming into the opening bell, we got a calm market right now. S&Ps, you see the action overnight. Now, quite the acceleration to negative action. You back it up to Monday's action. I talked about it on my show yesterday. We have 4 sell-offs there. Monday to start the day. Monday to end the day. Tuesday overnight, you the downside. When Europe opened, you got downside yet again around the middle of the day. You trade down to 45.96, but check out the action. Since overnight, you're talking about basically chopping around within about a 10-point range in the S&Ps from 46.25 to 46.35. I wouldn't expect anything too dramatic to happen before that 2 and 2:30 p.m. Eastern time action today. NASDAQ 100 negative by 13 points right now, 15,908. Some of those stocks, Microsoft in particular, with some volatility to the downside yesterday. We'll check that out in a bit. The Dow negative by 22 points. You're talking about less than 0.1% of 1% right now to the downside. We have the Russell positive by 2 points. Come on, charts. Catch up. Hopefully my internet's cooperating right now. We got a big day, internet. Don't fail me now. Come on, catch up. Catch up. Let's jump around. You got crude negative 59 cents right now. Gold contract down about $1 at 17.71 as we wait for these charts to catch up. Working somehow. Thinkorswim just not cooperating right now. We take a look at notes and bonds. Hopefully you're hearing me. If my producer could let me know if you got me. I think you do. Maybe we're back. Here we go. Everything catches up at once. Okay, let's do it again. We back up to gold contracts. Negative $1 at 17.71. Gold traded down hard yesterday on that PPI data. Gold trading 17.71. We got crude negative 60 cents at 70.13. Great day. We'll be talking to our man Teddy Kegstad from forex-trading-unlock.com. Great day to get his take on things. We got the Fed coming up at 2 and 2:30 p.m. today. Notes and bonds, a little bit of negative price action. We're talking about a yield right now of just under 1.45% on the 10-year. Right now, you're negative 1 tick, so pretty calm action in the 10-year. We jump back to the S&Ps. You're talking about positive by 2 points right now. All right, we jump around. The headline, Fed decision looms. U.S. futures steady as Fed decision looms. Market wrap. Surging inflation adds the case for central bank tightening. You have Asia shares right now. Shanghai, down about 0.4%. Hang Seng down 0.9%. Nikkei actually sneaking into the positive right now, up by 0.1%. Over in Europe right now, DAX in positive territory by about 1/3%. The FTSE negative by 0.2% right now. All right, let's jump around to some of the equities that are already moving this morning. We jump over to Lowe's. Lowe's has been on quite a tear recently, man. This stock, you're going to open down $5 though, as they come out with some disappointing outlooks in terms of going forward. Fiscal year 2022, Lowe's anticipates same-store sales could drop by as much as 3%. Or be roughly flat, drop by as much as 3%. Now, they have had some staggering same-store sales numbers, folks. I'm not sure if they listed in this article, but boy, you're talking about like 15, 20, 25%. Some of these retailers, home improvement stores, whether it's Lowe's, Home Depot, some of the comp sales for companies like Walmart, Target, just through the roof. But you're going to see some problems here. Lowe's is estimating sales of about $95 billion for the fiscal year, 1 week shorter than the next fiscal year. For fiscal 2022, earnings of $12.25 to $13. Analysts were expecting Lowe's to earn $12.93, right? So they basically open up a range that's at expectation or 75 cents below that for earnings. When you get into the numbers, though, fiscal 22, like we said, 3% or roughly flat. Sales going to range from 94 to 97 billion. The market was looking for 97.64. So check that out, right? They're basically saying at best we might come close to expectations, but we're giving ourselves a range of $3 billion of revenue below expectations and giving us a range of about 75 cents below that level for what you're talking about for earnings. CEO said the company still has plenty of growth drivers. Well, there's a CEO touting his own company. Launching private brands, expanding e-commerce. Nonetheless, folks, you're seeing it. Comp sales probably going to be down for Lowe's in the next year. Earnings going to be below estimates. Revenue probably going to be below estimates. They're going to buy back $12 billion in shares. But boy, yeah, you better believe it. I imagine you're going to see some volatility on Lowe's on the open. Check out this chart. You pull up the 3-year weekly. and you're basically trading at all-time highs. You were at $60 at the COVID lows. You came into COVID at $125. You're trading basically double that right now at $250. We're going to open at about $247 for lows. Let's jump over to Home Depot. Home Depot going to get hit by that news as well. They're probably going to pay a little bit of a penalty if Lowe's is seeing declining revenue as well. Now, Home Depot, much more to the professional side of the home renovation sector. But nonetheless, you are seeing a pullback of about $7 right now. You check out the 15-minute action. Come on, Thinkorswim, cooperate for me. No, what a bummer. A little bit slow this morning, unfortunately. But Home Depot is trading lower by about $7, from $402 to $395. This thing has been on a tear as well, not to the same degree as Lowe's had. But Home Depot going to pay a little bit of a penalty. I imagine they're going to see potentially some declining comp sales, might be missing on the estimates in terms of earnings and revenue, just like Lowe's. At least that would be the indication coming off that news. All right, well, we wait for yeah, there you go. There's the news. So Home Depot actually trades down to $390 before it claws back $7. You're trading at $397 right now. All right, what else we got going on in terms of retail sales? That number out this morning, okay? Listening to some analysts out this morning as well, talking about in any other day, this would be quite a big number that might get a lot of attention. Today, though, it's all about the Fed at 2 or 2:30. Might temper the action that you might get in terms of the market move ahead of a Fed decision expected at 2 o'clock today. But you saw retail sales up just 0.3% in November. 0.3%. Hopefully you got me. I think we're back now. If you weren't hearing it, 0.3% in November was the number for retail sales. For 0.8% overall. Where you were? Come on, where are we? Here we go. 5 of the 13 retail categories showed declines in receipts last month, led by a drop at electronics and appliance merchants. So the conversation that you hear out here is that retail sales coming into the holiday season, some of those sales might have been pulled forward to October. That's why they won't show up in November. Consumers may be aware of the fact that there's supply chain shortages, getting ahead of holiday purchases. That could make sense. It's an argument. Where the truth falls, we don't know in terms of maybe there was just a slowdown in the economy. Maybe people just aren't buying as many presents as they thought. I don't think that's the case, but it's possible. Now, led by a drop in electronics and appliance merchants. Here's what I'll say, folks, is that maybe if you were planning on buying an electronic or an appliance, maybe those actions you were getting ahead of the rush. Because, I mean, we've heard it. Appliances, you got to wait like 6 or 9 months sometimes for some of those appliances if you want them right now because of the home renovations going on. Electronics, maybe a similar story. So in certain segments of bigger ticket items that have had supply issues, maybe those did get pulled forward, or maybe people are just waiting for that little bit of a bottleneck to go away. Stay tuned, folks. We'll be coming right back with our man Kevin Hincks from TD Ameritrade Fast Market.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE. And you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps right now positive by 1 point. You get the NASDAQ 100 barely in the red by about 9. The Dow off 19 points right now. And we got the Russell positive by 1. We got the VIX right now trading just at about 22, an elevated VIX level coming into a big day for the Fed. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time on Tiger TV, the TD Ameritrade Network, Fast Market, with your host, Kevin Hincks, Tom White. They break down the day's market action. They walk you through hypothetical trade setups, folks, using options, talking about defined risk. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. You know, I think what the futures in the 4 major indices are telling us so far this morning, Tommy, is they have no idea where this market's going. You've got all 4 of them up or down less than 0.1%. And it just consumed a bunch of economic data. And still, you know, it's a pretty big miss in terms of retail sales. So the continuation of the narrative about an overheating economy may have just taken a little blow here in terms of the retail sales number, but it's still, Tommy, all about Jerome Powell at 2:30 Eastern as what I refer to as the mother of all conference calls. Like a CEO lays out the next 3 to 6 months for a company, Jerome Powell's about to do that for the entire economy and interest rates. So I think this will be a must-see event here at 2:30 Eastern time, Tommy.
I couldn't agree more, man. It's we live in interesting times, is the expression, Kevin. And it is pretty interesting. You don't often get Fed meetings of such importance that you're curtailing. I mean, I was talking to people in my house, Kevin, recently, and I was saying, on the heels of that CPI data we got last week, I said we got almost 7% year-over-year inflation, and still the Fed is actually in there buying $60 billion of assets a month, right? And they're in there with the 0%. Pretty remarkable to make that shift, which is what's coming down the line in the next 6 months or that or thereabouts. Talking about the retail sales number real quick. So it comes in at 0.3% in November, and I agree, man. This market, right from the close of action yesterday, Kevin, you're talking about a tight range of about 10 points in the S&P, and you can't even find that retail sales number on that chart this morning on the Thinkorswim platform. But interesting to try and think about. So 0.3%, you had some of the numbers, 5 of the 13 parts of it down. A part of that, electronics was in there, appliances was in there, as in down actually for the month. The spin out there early was that, you know, transactions, customers could be pulling forward some of those purchases, trying to get ahead of the holiday squeeze. But I said to my mind as well, it could be that people are buying less stuff. I mean, Lowe's was out there with a pretty weak outlook overnight. They're trading lower a bit, but they might see same-store sales, Kevin, down between 0 to 3%. They're probably going to miss on revenue in their range. They might miss a little bit on earnings. Without the Fed in play, Kevin, trying to focus, what is your take on kind of that retail sales number if we weren't just waiting for the main event today at 2 and 2:30?
Yeah, the question is, did everyone do their Christmas shopping early, like everyone kind of warned and threatened that they should? Or is this just a softening of the economy, right? It's hard to really say. I mean, look at the numbers from a month ago, 1.7, revised to up 1.8. So people were out there spending, pretty big drop-off, but still a positive number, just not as high as a month ago. So, yeah, it's hard to get a handle on exactly what it is. Did Christmas shopping, did everyone shop early? I don't know. It's hard to say. That seems like a little bit of a stretch. I personally am not done with my Christmas shopping, Tommy. So I look at the malls. They seem quite full near my house. I don't know about yours. So,
I would agree, man.
I'm still watching it. It's hard to say, actually.
Kevin, I'm asking, man, because I was on Amazon this morning buying Christmas presents, okay, where I got to send presents over to my dad that he can get the kids later still, all right? Don't tell the kids that, folks, all right? But as in, it's tough for me to imagine that people were so prepared. And I've been out here saying, Kevin, because we're so aware of the problems going on, that if you should probably be out there getting Christmas shopping done a little bit early. October, very hard for me to believe a lot of people are that prepared to be doing their Christmas shopping in October. But as I pointed out, I mean, maybe it's just certain parts of the economy, as in electronics, appliances in particular, right? I think we're all kind of aware that appliances, the backlog sometimes very extreme. So maybe that's a certain section of the economy that people weren't going to wait for a Black Friday or a Christmas if they needed an appliance, because that is an area that we're really having some supply chain issues. So maybe you see some differences there in terms of getting ahead of that curve potentially in October or something like that. So with that in mind, Kevin, what are we looking at in terms of what you guys are going to be talking about today? Maybe the Fed? What are we talking?
Well, of course, we'll be looking at what the market does, as uncertainty that hit this market Monday morning is going to be less uncertain at 2:30 Eastern today. But we're going to cover Adobe. That's got earnings tomorrow morning before the open. We're going to look at Lennar, the home builder. That's got earnings today after the bell. And then Lake Bolio is going to do a presentation on Netflix today. So they came to us and said, hey, we have some really interesting data on Netflix. So when they do that, we give them a lot of rope and give them their platform to do that, because when they have stuff, it's really interesting, Tommy.
And a company like Netflix, so kind of customer-facing, retail, you know, in terms of who their clients are. It's everybody, man. Interesting the pullback Netflix has had, Kevin, right? You were up to 700 and change. You're back down to 597 was the close yesterday. That puts you all back almost to January, which is remarkable. January this year, you were trading at 593 before we had some volatility. And, man, Adobe, some of these stocks, Kevin, this week. Microsoft had quite a day to the downside yesterday, but Adobe, I just looked, Monday you had a 675 print. Yesterday you had a 599 print. $76 shaved off that price. Just remarkable, some of the volatility going on this week ahead of the Fed. Well, Kevin, we look forward to the show as always. I imagine today's going to be a good one, man. We got plenty to talk about. We'll be watching at 12 noon Eastern time today.
Yeah, buckle up, Tommy. This is going to be a fun one today. Have a great day.
I'm going to be glued to my seat, man. I can't wait to see that conversation you guys have at 12 noon today. And we'll digest it tomorrow when we talk to you as well, Kevin. Thanks so much. We'll be watching at 12 noon today.
Thanks, Tommy.
My pleasure. Folks, tune in. It's always a great program. Today, you should be glued to TFNN all day, folks, with everything going on. Our man Dave White, he mans the 2 p.m. hour. That'll be a fun hour, of course. My dad manning the 3 to 4 p.m. hour. We might get some calm activity up until then. I imagine the way that this market just digested that retail sales number, I don't imagine people are going to be making many bets one way or the other ahead of that 2 or 2:30 press conference to follow in Chairman Powell. Interesting that you get retail sales, right? There's a lot to digest just in the last few days. Imagine, we got CPI data last week, 6.8%. We got PPI data, what was it, 9.8%, something like that this week. We now have a retail sales number for November that's softer than you were looking for. So you're getting hot inflationary data. You're getting potentially weak economic data. What's that lead to, folks? That is not a good scenario for the Fed. That's like a nightmare scenario. Inflation running out of control and retail sales disappointing, economy disappointing from where they want to be. That may cause the Fed to be a little bit worried. Now, I mentioned Microsoft, right? Check out some of these moves yesterday. Clawing back some of the gains. Microsoft gives up almost $20 from where you were Monday to the lows of Tuesday. We popped a bit off that low yesterday with the market clawing back some of the losses from the lows that you had. But man, you had some big moves. Apple, so much for $3 trillion. Apple, about $8 from that price level now. You were so close, within pennies. It was 182 and high change. 183 would have gotten it done. You're trading 174 for Apple. Stay tuned, folks. We'll be coming right back for the market open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have markets open, and you really wouldn't even know it from the reaction. No real reaction at all. We get the S&P sitting right now positive by that 1 point, NASDAQ 100 negative by 18. We had all the markets slipping into the red, but barely right now. You get the Dow off 22 and the Russell negative by 2. Bitcoin negative $185, trading at 47,685. Seems to be just under 50,000 where Bitcoin's been comfortable recently. Crude, $70.06. We'll be talking to our man Teddy Kegsack coming up in the next segment. We'll talk some Forex. We'll talk some crude oil coming into that Fed decision. Gold contract, $17.69. Quite the pullback on gold. On Tuesday, you saw a rise on the CPI data to almost $17.90. You give back all those gains. We've been sitting right at Friday's low, basically, of $17.70 in gold, and we jump to the all-important notes and bonds seeing a little bit of a drop on the open. From 9 o'clock, we've dropped about 7 ticks right now. That's pushing us towards a yield right now where we are. We're at about 1.47%. You just went up 2 basis points. Just like that, 1.47%. The yield in the 10-year. The 30-year is negative 20 ticks. Look at that pullback to 161.19. And this market, though, pretty calm action. Let's jump around to some of the FANG stocks. We'll start it off with Microsoft because, man, they had quite a day yesterday to the downside. Microsoft right now up 0.25% at 329. We jumped to Apple shares. Apple trading at 174.56, basically flat, up a quarter itself. Now, it's so interesting, a company like Apple, right? It's moving 20, 30 cents. I say basically flat. Meanwhile, it's got 16.4 billion shares. What does that add? That adds about $5, $6, $7 billion to the market cap of that company overnight, just by a quarter move. Always remarkable how many shares they have outstanding for Apple. We jumped to Google shares, down about 0.75% for Google. We jumped to Facebook shares, down 1%. We jump over to Tesla, down 0.75%. The chip stocks, Nvidia, down 0.25%. Man, Nvidia's really pulled back. Just on this chart alone, you back it up, I got a price of 325 to 272, and that doesn't even encompass the high of 346, backing things up to November 22nd. Just like that, we're trading at 280 on Nvidia shares. We jump over to AMD. AMD down 1% as well today. And let's check in on Lowe's and Home Depot. Not bad, man. Lowe's down just 1%. You have the market negative as well, and they had quite an outlook that they put out. Home Depot, I'm guessing, claws it back as well. Yes, they do. Home Depot barely in the red right now by about 0.1% for Home Depot. Let's jump around to some of the travel stocks. Man, it just never ends. Carnival down another 2.4%. We put this thing on a daily. Talk about breaking out of that channel line. Not so fast to the upside. You got Carnival down 2.2. Norwegian right now down 1.5%. We jump over to the airlines. American down 1.2%. Man, these airlines, everything. Delta down a full percent right now. United down more than 1%. We jump over to domestically. Yeah, Southwest down. Man, it's just amazing the pullback you've seen. You're talking about giving up $24 from where we were in April in a company like Southwest. You could have made the argument that you're a little bit insulated to the woes of international travel by buying potentially one of the domestic airlines. Man, they still got some problems, though. JetBlue trading at 13. We came into COVID at about 20. Southwest shares trading at 40. We came into COVID at a price level of about 58. Yeah, watch out on those travel stocks, indeed. Now, let's jump around to some of the stocks that are moving here. Toyota, they announced they're going to produce a record 800,000 vehicles in January, ramping up output to make up for prior production lost to parts shortages. The market will love to see that, man. Toyota, there's a run for you, up 3.2% right now for Toyota shares. Jumping around to what else? Eli Lilly, they raised the 2022 profit and revenue forecast. They got a meeting with investment community, noting that it's on track to meet its goal of delivering 20 new treatments in the 10-year period through 2023. They are higher on that as well. Eli Lilly up 3.8% right now. Domino's Pizza trading lower. They get a downgrade to underweight from equal weight. Barclays saying solid fundamentals and COVID headwinds in the industry as a whole help Domino's outperform, but noted that those headwinds for the competitors are now fading. I don't know. Maybe. It seems like Domino's always seems to do pretty well. Down 1.3% though. I mean, remember the news that it was going to all be over for a company like Domino's in terms of delivery? Man, you traded from 323 to above 500 this calendar year, folks, for Domino's, if they have held steady, even as the economy has opened back up. Regeneron gets a downgrade as well, cites the risk to their best-selling eye drug, Eylea, from the future release of biosimilars. They are down about 2%. And this is, I think, what I was thinking of. Yeah, Six Flags is what I was thinking for travel, as they were higher. Goldman Sachs upgraded it to a buy from neutral, noting resilient ticket pricing as well as guidance from Six Flags that Goldman considers conservative. So they got conservative guidance out there in Goldman's opinion, and they have resilient ticket pricing. Yeah, some of these parks, man, they can just raise those tickets up 4.2% right now for Six Flags. Disney, one of my favorite stocks, but man, they have been a woe. Disney down about 0.6% right now, trading at 148. But Six Flags in the positive, off of a high of about 50 earlier this year, kind of right where you came into COVID, which is interesting for Six Flags, trading at about $38. Hostess Brands, the maker of Twinkies and other snack foods, rated a buy in new coverage at Citi. Hostess is exiting the pandemic in a strong position with innovation driving market share gains. They're up 1.1%. You know what I was talking about recently? Good old yodels. You ever have yodels? I haven't had a yodel in forever, man. They were one of my favorites. I recently had a Devil's Food Cake donut. I know, healthy. That was over the weekend, though. Had a Devil's Food Cake donut, and it reminded me of a yodel. Haven't had a yodel in forever, but I think that might be a Hostess brand item as well. Nonetheless, Hostess up 1.1%, man. They well above. You came into the pandemic at 14. You're trading at 19. You're at $9 almost at the COVID lows. And UPS, so UBS names UPS their top pick. UPS should benefit from increased consumer spending, and it has a greater chance of margin expansion than its rivals' margin expansion. Going to be a lot to talk about margins, folks. I mean, you saw it with the retailers. So you got UPS up 1.9%, trading at 207. We jump over to Walmart. Walmart right now up 0.2% right now. This is a weekly. All right, you keep your eye on Walmart. Every time it's bounced off this trend line. If you look where we were in July of last year, to the lows of March, to the lows of October, to the lows of November, Walmart bouncing off that line. Quite a week it's putting together. You take a look at the 15-minute action, right? We've seen some market pullback. You've seen Walmart go from 135 to 145 since last Thursday this week. But, man, when they pulled back, harsh, what it had to do with Walmart, Target, came out saying, hey, we got rising prices that we're having to pay, and we're not able to transfer those rising prices to our consumers at a fast enough rate. They're competing on price. They're competing on price at very, very minuscule levels, folks. Walmart, right? They're selling so many products at very low margins to be the cheapest store out there. That is how they compete. They compete on price. They're the low-cost discount retailer, Walmart. That makes it very difficult for them to raise prices. Now, here's the other side of that I'll give, though. I heard that conversation, right? And I said to myself, well, if that's the case, why is Dollar Tree just jacking up prices 25%? And they say that their consumers are fine with it. Because those are some very price-conscious consumers. And yet Walmart and Target are saying they're having trouble doing the same thing. I mean, maybe it's just something where Walmart and Target, they have such competitors that it's very difficult for them to raise those prices to where they need to versus a company like Dollar Tree. There's only 2 stores in the business that they compete with, and they were the only one left that was doing dollar items for everything. All right, folks, stay tuned. We get the S&Ps negative by 4 right now. It's Fed Day, and we'll be coming back talking to our man Teddy Kegstack from Forex-Trading-Unlock. We'll be right back, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&P is negative by 9 points right now. A little negative action in the markets. Let's jump over to our man, Teddy Kegstat. We talk to Teddy every Wednesday, folks, at 40 past the hour. You can reach Teddy at his website, forex-trading-unlock.com. Teddy Kegstat, good morning.
Good morning, Tommy. We got a lot to talk about today.
We better, man. It's not a slow day in the market, that's for sure. I was talking to our man, Kevin Hincks. This morning I said we live in interesting times, man, and today an interesting day for sure with everything going on. So from a Forex perspective, Teddy, which I know is how you look at things usually first and foremost as you digest everything, what do you look at on a day like today in the Forex market if we can start things off that we're, waiting for Chairman Powell at 2 o'clock, press conference at 2:30. As a Forex trader, what do you look at that might be moving, especially on that type of news-driven event potentially?
Well, until the meeting is over, I think you're going to see a very dead day in most of the currencies, especially the euro, the pound, the Swiss. I think they're going nowhere until after the meeting. Now, you might see the U.S. dollar Canada because it's breaching some key resistance right now. That trend, the momentum is there. I think there might still see a lift in that may continue to trend through the day. Probably because oil is pretty stable right now, So, and they're waiting for the interest rate moves, which right now is odds are they're going up, So, not that they're going to pull the trigger, today, but that's going to be an issue. So those are the Canada, U.S. dollar Canada, and also the U.S. dollar yen is looking like it wants to break out to the upside also today. Those are the only two I think you're going to see any action until the 1:15, Chicago time or 2:15 your time. Once that happens. Now here's the thing is, especially like you look at the euro and the pound are not too far away from their lows. They look like they want to rally, but this is the kind of day where the algos are going to kick up. You're going to have a lot of noise coming out regardless of what they say. Like the odds of them pulling the trigger are probably very slim. I don't think that's going to happen today, So especially because they have to digest the PPI data from yesterday, or from the other day, and also the CPI data. These numbers are getting really scary, Tommy.
Yeah, I'm not sure if you heard me say, man, I was saying the same thing, saying it's really remarkable that the conversation is just how quickly we're going to slow asset purchases. And, the Fed's not going to freak out the market, folks. I'm not here saying that they're just going to end all this stuff. But it is remarkable, Teddy, that you get a CPI at almost 7%, you get a PPI at almost 10%, and the Fed is still actively buying an almost incomprehensible $60 billion every single month. It's a staggering level of stimulus still going on with those numbers. So I agree, man. I agree. And let's see if we could, because I was pulling it up, the U.S. dollar Canada. It looks like that was almost the biggest mover that we've had in the last week, Teddy. So what is driving the U.S. dollar Canada? Is that the oil trade going on there?
No, I think that's actually the interest rate trade that's driving it right now. So the oil trade is pretty stable. But right now, the whole world's looking at the 30-year and the 10-year to continue to trend lower, And right now, they've been kind of consolidating. And I think it's because they were waiting for the big inflation numbers, and also because they're waiting on the Fed. we're done for the year now when it comes to most of the numbers, and especially with the Fed. So what's going to be the outlook for 2022? Now, we've been already talking about this kind of trend already for months. Now the Fed is finally admitting to the fact that, guess what? 2022 is going to be a year of inflation. There's no way you can look around it, So there's no way the brakes are coming down on inflation for at least the next 6 to 12 months, and that's a very severe environment for the Fed to deal with,
Yeah.
We're going to be in the first time now where we have a lot of first time things going on right now in the business sectors, So, and I think that it's going to be very shaky, especially when it comes with the interest rate play, where we know rates are going higher. So what's that going to do to the value of the dollar? So there's all kinds of scenarios where even if we get our supply chains to kick back up into gear and we smooth those things out over the next 6 months, what happens if there's a radical either decline or rally in the dollar over the next, say, 3 months? How does that play into inflation as well? So, there's certain ways in which the dollar's strength or weakness may come into play and help us as far as either our exports or our imports, depending on where you're going to and from, But I don't know how that's going to get mitigated in a smooth fashion next year. Honestly, I can't even begin to see how that could happen.
Yeah, there's so many things in play, man. And even, if you look at the best case scenario almost, which is the estimates at this point in terms of talking about inflation, I think they go out and you eventually get to the beginning of 2023 that you're talking about maybe 2.5% CPI or something like that, which the Fed would totally be cool with probably, as you're just over the number they're looking for. But that's a year out, more than a year out.
Right.
And that's kind of like, in my opinion, a best case scenario, because as you stated, it's not going to go from 7%. We're seeing the numbers to 2.5%, even on a quarterly basis. That would be very, very difficult with everything in flux. But in my own head, that's the estimate right now for the beginning of 2023. But I go back to so many economists getting it so wrong in 2021. The inflation numbers they were looking for were nothing like what we're seeing right now. So those are the same people putting out the estimates that give us the best case scenario is about a year from now, we're back to normal. Well, what happens if they're missing there, right? Which has to be factored in as a trader. You should be factoring in all possibilities and assigning them a probability. And I just see at least the possibility that it's a little bit harder to get under control. And then if it is a little harder to get under control, maybe that forces the Fed's hand a little bit faster, which could freak out the market to some degree.
Sure.
But we're going to find out, man, over the next 3 or 6 months, because Chairman Powell, when we were on vacation a couple weeks ago, I think I told you on when we chatted last week, I said I was chatting with my dad. He tells me what Chairman Powell just said. I said, whoa, that's a pretty strong statement, man. Time to retire the term transitory. He was the biggest cheerleader of that term, I think, overall. And so we come to the first meeting where he's going to, where that is his mindset. Because the last time he had a meeting in a press conference, he was still technically a believer in the word transitory, at least when he was putting it out. So we got about a minute and a half, Teddy. What other currencies are you looking at? It's been a pretty tame week. That's why, in terms of chopping around, maybe waiting for these big, because we have an ECB decision and a Bank of England decision coming up tomorrow, correct?
And that's what's been going on for the past week and a half, is that you've seen that. If you look at the U.S. dollar Swiss, talk about Swiss cheese, that's just a very narrow range trade. The range traders have been definitely cleaning up the past week and a half in the euro, the pound, and the Swiss. So I expect you're going to see a breakout after today. But I would be very leery of what happens off of the initial release. Like I said, the algos are going to it would not surprise me to see, for instance, the British pound spike low to an all new move low today, and then still settle higher on the day. You know what I mean? Like that kind of move, or even rally, make new highs, and then all of a sudden tank and actually make new lows on the day. You know what I mean? So until we have a verification going into tomorrow, I would say for the FX market, if you're not in a position working it, stay out, because it's just you're not going to be able to compete with the machines if we actually have volatility. Now, if we have a dead number, which I don't know exactly how that would occur. I think we're going to see some action no matter what, especially with, I think, the U.S. dollar yen and also the U.S. dollar Canada. If the other ones don't move off the number, those will probably continue their trend. Those might actually be the ones where you see an accelerated movement today, because you got to think that a lot of traders are planning on the fact that we're going to have volatility.
Tell you, we got to run, man. I appreciate the update. We'll talk to you one more time before Christmas next week, man.
All right.
Thanks, Teddy. Take care. We'll be right back, folks.
All right. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps catching a little bit of negative action. I have the S&Ps right now down 17 points. So much for no movement until the Fed. I have it up here on a daily. I've been talking about this channel that's been in for a while. We're approaching the lower boundary line of that channel line. You'd have to get down to about 45.87 or about, and you see we've gotten below it occasionally as well. But interesting, last 3 days, you're talking about trading down 113 S&P points now from where we were just Monday morning, putting things back on a short-term time frame, your 5-minute chart. Come on, Thinkorswim. And I believe it's just my internet going on this morning, folks, kind of bogging things down, unfortunately. But we got the S&Ps down about 17 points. NASDAQ 100 negative by 87. And there's your action. Yesterday's low, you're only about 15 points away from that price level now. There's your sell-off on the open in the S&Ps. We're down about 20 points from where we were at 9:30 this morning. What else we have going on, folks? The TFNN Tiger Dollar Holiday Sale is going on through next Thursday. So you're talking about only 8 days, folks. We've doubled the bonuses that you can get when you purchase Tiger Dollars, folks. You spend $500, you get $600. That's a 20% bonus. You spend $1,000, you get 1,300 Tiger Dollars. That's a $300 bonus, or 30%. You spend $1,500, you get 2,100 Tiger Dollars. That's 600 additional Tiger Dollars, a 40% bonus, so 20, 30, or 40%. That runs through next Thursday. Folks, if you're a current subscriber out there, I encourage you, get your Tiger Dollars. You'll receive them right after you purchase them in the mail. You can apply them in the email. You can apply them to your account. They're automatically used with forward transactions. If you're nervous about applying them, give us a call. We'll be happy to help you out, folks. It's very simple. You apply them once. They're used for all forward transactions, whether you're talking about monthly, semi-annual, or annual pricing, webinars we do, live trading events we do. Tiger Dollars can be used for all of that. We only do about 2 sales like this a year, folks. So every 6 months. You don't get this one, you probably have to wait until about June or July of next year. Who knows where the market will be by then. All right, folks, stay tuned. Should be an interesting day in the markets. We got our man Basil Chapman up live now at 10, Larry at 11. Fast Market at 12, Steve Rhodes at 1, Dave White at 2, and Tom O'Brien, my dad, live from 3 till 4. Thanks so much for tuning in, starting your trading day with me, folks. Stay tuned. Basil Chapman's coming up right now.